Okay, let me finally introduce to you Brockhaus Technologies. So, does this interest you? So they're sitting at just 7 times EV to EBIT. Their revenue is growing at 30% plus and earnings per share is even faster than that. It's coming off 100% growth in the previous 12 months. They've been buying back stock. They've got low debt. They've got high insider ownership of 35%, with the founder CEO still leading the business. They have a 20-year track record in private markets with a 30% plus compounding growth rate performance over that time. And there's just limited awareness and low institutional ownership of this one. No one's talking about this on Twitter. This is very uncovered. All right, so that's the highlights, and let's now jump into the details. And I have a decent position in this one. I'm pretty biased. Please don't gamble with your money. Do your own thinking, please. Pretty much ignore everything I say and do your own work. All right, so Brockhaus Technology is a German-based serial acquirer or potential serial acquirer. They're focusing on acquiring mid-sized German tech companies. I say potential serial acquirer because they only have 2 subsidiaries at the moment, which is Bike Leasing and IHSE. Okay, so this might be quite a ballsy comparison with Halma and Roper, but that's sort of the role models that they're looking at, Roper in particular. So yeah, they focus on the German, they call it Mittelstand market, which is that sort of small to medium enterprise market in Germany. They're looking for enterprise values of somewhere between 30 and even 300 million. 300 million very much on the top end of that. That's not really what they're looking for. They have a preference for the smaller ones, and they do tuck-in acquisitions at the moment as well in that smaller space, but yeah, they have the capacity to go up to 300 million because they actually have quite a big borrowing capacity. Their debt to EBITDA at the moment is like 0.8. They're willing to go up to 2.5. They have access to a lot of money, essentially, if they wanted it. The EBITDA range they're looking for is sort of that 3 to 30 million range. So yeah, they're looking for tech companies with strong growth potential, that they think they have scalable business models, high margins, good cash conversion, proven track record of management, and management incentivized through equity exposure, through Brockhaus hopefully and in the business, the subsidiary too. So the story is that Marco Brockhaus started this back in 2000 as a private equity business. He did this 3 times before finally kind of getting tired of having this mandate to sell these great businesses that he had bought and grew up and evolved. Because being private equity, you kind of need to return the money to your investors after a 5-year period. That's part of like the private equity playbook, I guess. And now Marco wants to hold businesses for a lot longer, like longer periods of time, so he can get that compounding effect to work in his favor, essentially turning into a long-term holding serial acquirer. One of the previous businesses was Peakwork, which was sold to Juniper, which is a subsidiary of Constellation Software. So I think that's a fun fact. Another fun fact actually is Palace, a subsidiary that they had, that was sold just a couple of years ago to Indutrade, which is the serial acquirer beast out of Sweden. So yeah, like I said, in this graph shows in their slide deck that the plan is to not sell the subsidiaries from now on and keep them for a very long time, try to get that compounding going. Yeah, those private equity requirements are in the past now. And as you can sort of see as well, it's kind of that buy and build model. They're sort of getting the acquisitions, and then they're working on internationalizing them, growing them further, enhancing them with their 20 years of experience in the German tech market, and yeah, reinvest, eventually get to the point where they can reinvest those cash flows, repay the debt, whatever they need to do, into more businesses just like this. Now, their serial acquirer twist is that they're focused on the German tech businesses, not software specifically like Constellation Software, but hardware and software. They are looking for big fat margins, that's really important, and strong growth is really important. And unlike some industrial serial acquirers like Technion and Lifco and Lagerkrantz, Brockhaus definitely have this strong growth prospects as a key feature that they're looking for. Now, here's a little brag from the COO, Dr. Marcel Wilhelm. He said that the secret of our success is our special business model and our strategy of focusing on acquisitions on these high margin and high growth tech and innovation champions with a B2B business model from the Mittelstand and nothing else. We've proven that year after year at Bike Leasing and IHSE, which we'll get to in a moment, and their older subsidiary Palace, which we've sold at the end of 2022 with a big increase in value. We focus on companies that have an EBITDA margin of 30% plus, that are delivering double-digit revenue growth and boast business models with low capex, and they have pricing power. And together with the management of the operating entities, we're in the position to take them even to higher levels of growth, and that's what we've accomplished with all of our subsidiaries so far. Now, the first subsidiary we're going to look at is bikeleasing.de, where Brockhaus owns 52% and the founder CEO of Bike Leasing still has a 40% stake, and he remains as the CEO as well. It's actually I think they're co-CEOs, the two founders. So they still have a big stake in Bike Leasing as well. Now, if you are looking for a deeper analysis of Brockhaus Technologies, there's a great write-up on Value Investors Club for those that are interested. The broker that I'm using to access Brockhaus Technologies is Interactive Brokers. There's a link in the description for that. Okay, bike leasing. So they say that they take the burden off their customers by efficiently managing the leasing of bikes to their employees. Let's talk about what's involved here. Okay, so imagine a company with, say, 200 employees doing, something. Instead of handling the leasing of bikes themselves to their employees, they outsource that to bikeleasing.de. And bikeleasing.de, they handle the insurance, the financing, and the coordinating with and dealing with the bike shops. They do it all online, and they do it quite simply. So there's an obvious benefit for everyone involved here. Companies provide bikes as part of their ESG strategy and a perk to attract employees. This is quite important in Germany. Yet they don't actually have to coordinate any of it. Employees then essentially get the option to get a bike leased. They can lease a bike with pre-tax income. So they don't have to pay this large upfront payment of, say, let's say it's 10 grand to buy an e-bike. Instead, they can pay that off over a 4-year period, and they get it 35% cheaper because they're paying it with pre-tax money. It's coming out before their final pay. Then bike leasing, they make a subscription fee on each bike that is leased. The bike repairs, the purchases, the deliveries, all handled by the bike shops. Now, bike shops and bike brands, they actually really love bike leasing for this, as they get to sell their bikes at normal prices to these corporate people. Essentially, they're driving sales to the bike shops. And look at some of these growth numbers. It's very impressive. They've essentially doubled the business in just 2 years. And it's important to get a handle on the nuances of bike leasing because it makes up 70% of Brockhaus Technologies. So bike leasing sales, they are seasonal. Plus there is a backlog of cash flow that gets delayed with processing all the leasing finance with the leasing finance companies. So it's actually a little hard to follow this quarter by quarter, but looking at it annually is the way to make things far easier. Now, regarding what Brockhaus paid for this business, they paid 181 million euro, and that was for a 52% stake. That was back in November 2021. So it's now 2.5 years later. So they paid a multiple of EBITDA at the time of about 10.5x. 10x for a business seems high compared to a lot of serial acquirers try to get below 5 times. So this seems it feels like they've overpaid at first. But so far, they've got back 20 million in EBITDA in the first year, 30 million in the second year, and they're projecting to get 40 million in the third year. So a payback period of about 5 years is on track after tax. And there's lots more growth to come. So for a business that's growing very fast, this appears actually like a very strong deal. Bike leasing have also ventured into Austria now, and they're now the number one bike leasing business there, and that's growing very quickly too. I think it's up 300% in the past 12 months. So they're also confident that there's a lot more future growth. So what they're going to do is they're going to just increase sales by selling more to corporate customers. There's a lot more runway to go there. The total addressable market is actually really big. I think they said there was a report that came out from Deloitte that said 60% of corporations are wanting or open to doing bike leasing. And I think then more than 80% of employees of those 60% said that they'd be wanting to get a bike leased to them. And at the moment, the numbers are only like 34% of the corporate customers that they have. And the penetration is really low. I feel like it's like 1 or 2% of the market is where they're up to at the moment. That could be wrong. I might have read that somewhere else. I'm getting confused with some companies sometimes. So yeah, please do your own research there. Anyway, back to some levers for future growth. They want to increase the usage rates on the already onboarded corporate customers. That's essentially getting more people in the corporations to use the program. extending the platform by adding employee benefits next to bicycles, so not just bicycles, leasing out other things potentially. And then continued internationalization. So Austria has been a really strong market for them. There are other countries around them. Maybe Denmark's a potential option. I don't know. Yeah, there's a lot of option for them to grow, and they're growing really fast. And I think that a big part of this thesis is wrapped up in bike leasing as a business. So you have to get comfortable with that, which I have got comfortable with now. Okay, so I've gone through a fair bit of detail on Brockhaus Technologies so far. I've still got a valuation I want to do. I want to talk about their second subsidiary and the things that I like about this business, and the couple of issues that I have with the business as well. So yeah, I'll save that for the next video. Until then, hope you're enjoying. Interactive Brokers link in the description, don't forget. All right, I'll see you in the next video.